Hi, I'm Tatum Glendenning with your LGS Weekly Market Commentary on this Wednesday, March 11th, 2020. On Monday, we saw a long-standing partnership splinter between some of the world's largest oil producers. Saudi Arabia declared a price war on Russian oil interest in crude oil producers by cutting the prices it sells crude into foreign markets, offering discounts in Europe, the Far East, and the U.S. to attract refiners to purchase Saudi Arabia's crude at the expense of other suppliers. Saudi Arabia and Russia failed to reach an agreement on production cuts to support the price of oil in the face of the coronavirus-related economic slowdown. Saudi Arabia's decision sent oil prices down the most since the Gulf War in January of 1991, as crude dropped to an extreme decline of approximately 31% to $27.34 per barrel. Dow Jones plunged over 2,000 points as the coronavirus continues to create global panic with the number of new cases on the rise. The fast-growing coronavirus continues to spread throughout the world, furthering the slowdown in the U.S. global growth and extending losses in corn and soybean futures for the third session in a row. So far, there has been over 110,000 cases worldwide, 4,000 deaths, and 60,000 recoveries. 15 of those deaths have occurred in the U.S. So far, Italy has over 9,000 cases and 463 deaths, causing Italy and its 60 million residents to be placed under lockdown. The USDA released the March WASDE report yesterday at 11 a.m. Central Time. Corn and wheat ending stocks remained unchanged from last month's report, totaling 1.892 billion and 940 million bushels respectively. Soybean ending stocks decreased from the previous month's report to 420 million bushels. The USDA raised the Brazilian bean production number by 1 million metric tons to 126 million metric tons, as well as Argentina's beans to 54 million metric tons. Both corn numbers were left unchanged, totaling 101 million metric tons for Brazil and 50 million metric tons for Argentina. Rains in Argentina and Brazil will help ease dryness and limit stress on crops, while frequent rains over the next 2 weeks will expand delays on fieldwork and put off early corn planting in the Delta and Midwest region. With the coronavirus outbreak slowing trade, transportation, and other energy-intensive economic activities, demand continues to remain weak. Corn, beans, and wheat exports were all at the bottom end of the market expectation. U.S. corn totaled 32.7 million bushels out of the market expectation range of 31.5 to 43.3 million bushels. Soybeans exports totaled 21 million bushels, and wheat totaled 15.3 million bushels. That's your weekly market commentary. Follow back up with us on Wednesday for next week's market analysis. Have a great week.
If you haven't downloaded our mobile app, go to your App Store or Google Play and search for the Tyson LGS mobile app, where you can sell and manage your grain anytime, anywhere.